Good evening, everyone. On behalf of Dadari CP Study Circle, I welcome you all to today's seminar on recent judicial pronouncements in indirect tax. We have with us here Vinay, Jain. There are many pronouncements by various courts like Apex Court on the various subjects, which are a little bit contradictory also. So there might be many questions in the mind of the members. So we thought of having a session on the. I request every members to raise their hands when they have questions. So as speaker said, we can take up questions once case law is ending. So before we start the session, I request Hinal Furia to introduce the speaker.
Thank you, Rahul. Thanks for giving me the opportunity to introduce our speaker. Our speaker today is Mr. Vinay Jain. His area of practice is indirect tax, and he specializes in GST as well as service tax. He's a qualified chartered accountant and holds a degree in law from Mumbai University. He's also a ranker in both ICAI and CS examinations. He regularly appears before the CESTAT and quasi judicial authorities. He has successfully argued several matters for clients from diverse industries and has several reported judgments to his credit. He is also IDT Technical Committee member in Chambers of Tax Consultant. He is an active speaker at various professional forums, and his articles are published in the leading journals. So that's the short introduction of our today's speaker. I request Girish to give a certificate of appreciation.
Yeah, Hinal, just before we give a certificate, I request Girish to play ICA motto.
Yeah, thank you, Rahul bhai. I request members to rise for the ICI motto.
Yaesha supteshu jagrati Yaesha supteshu jagrati Kamam 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 pursho nirmimanaha Tadeva shukrada brahma Tadeva mritamuchyate Tasmin lokaha shataha Sarve taduna kaschana
Thank you, Girish bhai. I request Girish Maru to present e-certificate to speaker.
One minute.
Thank you so much.
Sir, I behalf of Dadari CP Study Circle request you to accept this certificate of appreciation for today's session, sir.
Thank you so much, sir. Thank you so much.
Yeah.
Much for inviting.
Vinay sir, floor is yours now.
Okay. Sir, for your most nice introduction. In the other CPs, first time generally when I was on the CA, I was very very precise. I was looking for the like what is the ultimate outcome of any decision, whether it is tax is leviable or not leviable. That was the only concern I have. Gradually, after becoming an advocate, thereafter when they be arguing in the courts, now I realize how important it is to not only see the decision as to what is the conclusion, but how the conclusion has been arrived at, what has been argued. Hello, it's now it's clear, sir. Somebody says my voice is breaking. Hello,
Yes, sir.
is
It's
this clear
clear.
now?
Yes.
Okay, that's what I'm saying, sir. So not only what is the conclusion of any judgment, but what has been argued, how the court has appreciated, what has not been argued, what is rejected against us, what is not being rejected, what are the nuances of the judgment. That also we should keep in mind, so that as and when we are advising the client, all the facets of the judgment can be covered. So today we are going to cover around 12 decisions. So not only because already nowadays it is very readily available, so all of you must have the copy of the judgment, but what is the precise contention, how it is argued. So my endeavor would be for any of the judgment, you should be in a position to know, okay, what are the facts, what has been argued, and how the court has reacted. And not only that, we will live in the live session, we will try to interpret as to what is the meaning of the particular word and how it has been construed by the court. So we have covered around 12 decisions or so, but take it from me, not all the decisions will likely to take the same time. First few decisions which are very very recent are likely to take more time. And feel free to ask any question. I also initially check whether you are asking the question end of the session, because there are case laws, so people may not be able to remember what is being the facts and listening at the end of it. And therefore, I prefer that as and when some decision we will finish, whomsoever has any doubt, you can ask. I am not guaranteeing that I will answer all the questions. So, to the best of my ability, I will try to answer that. So first, because nowadays these two decisions, especially this ocean freight and the second one, there are n number of queries which are coming from the all the companies, whether it's domestic companies or MNC. Many of the concerns the clients have. Therefore, I thought I will take much time in both these decisions. So, should I start my presentation, sir?
Yes, sir.
I will just
Yes.
share my screen. Is it visible, sir?
Yes, sir.
Okay, thank you. So therefore, agenda is to discuss this 12 decisions, and more I have included Supreme Court and High Court only because if you learn that's what Mr. Sheeran also says, if you learn the law from the AR, that will be disaster. Because the AR, no reasoning, no conclusion, nothing. They just do whatever they want to. Ultimately, the conclusion is tax is payable. So therefore, I have less regard insofar as the triple AR and AR decision is concerned. In GST and service tax also itself, there are judgments of the Supreme Court and High Court. Therefore, we have included all these judgments in our agenda. So we will be discussing this ocean freight, secondment of employee, then the Supreme Court decision in the inverted duty structure, and recent decision of the Gujarat High Court in whether what will be the value of the land to be taken, and in case there is blocking of electronic credit ledger, in what circumstances they can block, how to release it. And nowadays the DGCI or DGGI also making so many investigations, and they are threatening to make payment. So whether it is obligatory on our part to make any payment. Similarly, this thing, there are all the judgment we have selected is on different facets of the GST as well as the other laws. So each one has its own flavor. So we'll start with even though for AR and triple AR, I included two decisions because that have an industry-wide ramification, whether the conclusion is right or not. We just want to know what is the fact pattern in those cases, how it can affect any of our client. That is the reason I included these two ARs. So let us start from the ocean freight judgment. So ocean freight judgment, all of you must be aware that we have argued the matter before the Gujarat High Court, and Gujarat High Court we have succeeded. The Gujarat High Court has held that levy of GST on ocean freight is unconstitutional. So very briefly, I mentioned the fact because so, but everyone, most of you must be aware of the fact pattern. But in that case, there was a in Mohiti Mineral, they have entered into contract with the foreign exporter, whereby foreign exporter will supply the goods, and also the terms of the contract was on CIF basis, meaning thereby that the freight and insurance will be arranged by the foreign exporter only. Mohiti Mineral in India was not concerned with the arrangement of freight, insurance, everything. Everything will be done by foreign exporter only. A foreign exporter will charge one lump sum amount to the Indian importer, that is Mohiti Mineral. The contract for transportation will be entered into between the Mohiti Mineral and the foreign shipping line. And contract will be entered into foreign exporter and the respective shipping line. There is no privity of contract whatsoever between Mohiti Mineral and the foreign shipping line. So here the GST department has introduced a notification 10 of 2017, which prescribes that in case of this ocean freight service rendered by the overseas shipping line and service is rendered in such circumstances, we will notify the recipient as importer as a recipient. So by way of notification, they have said that the importer in India we will deem that as a recipient, and importer will be liable to GST in India. So we have challenged the virus of this notification before the Gujarat High Court, and the reason and the argument before the Gujarat High Court was, if you see this 5.3 of the IGST Act, so the 5.3 of the IGST Act says, government of recommendation so and so, tax shall be paid on reverse charge basis by the recipient of such goods as both. So therefore, 5.3 says, in case of service received from outside India reverse charge basis, it will be paid by the recipient. The word recipient here was important. We were arguing that recipient has now been statutorily defined. We'll see a definition in a minute. So only and only you can make the recipient as the person liable to pay GST and nothing, nobody else. So our contention was the importer is not the recipient of the service. And why we are saying so? If you see the definition of recipient also, it says 293 says a recipient of supply goods are both means where a consideration is payable, person who is liable to pay consideration. And clause C says where no consideration is payable, the person to whom the service is rendered. So according to us, what we are saying, the clause 293, clause A and clause C, both are mutually exclusive in the sense that you have to determine in a given case whether there is a consideration is there or not there. If consideration is there, 293A will apply. If consideration is not there, then 293C will apply. And therefore, in this transaction, consideration is there, contract is there, between the foreign exporter and the foreign shipping line. And therefore, the recipient of the service is foreign shipping line only, and importer cannot be the recipient of the supply. And therefore, we have argued when section 5.3 says it shall be paid by reverse charge basis by the recipient. The shipping line is rendering service to foreign exporter only, not to the importer in India. And therefore, your notification 10 of 2017, which prescribed the importer as the recipient of the service, is bad in law. That is what we have argued. We have also argued. We have also argued that in these transactions, the ocean, especially ocean freight, the entire service is rendered beyond the territory of India, so in the ocean. So therefore, the government of India, the legislature does not have any jurisdiction to tax the transaction which is occurring outside the limits of India, and therefore the levy of the IGST on the ocean freight is extraterritorial in nature, and therefore bad in law. We have also argued that in these types of cases, because obviously there is no contract between the foreign shipping line and the importer, I don't know what is the value of the service which is charged by foreign shipping line, and therefore value is also in doubt. Your notification which prescribe valuation mechanism prescribed which says that in such and such circumstances we will treat 1% of the CIF value as the value of the service is also bad in law, because primarily we are arguing that you cannot you have to provide the machinery for valuation. You cannot provide a standard deduction upfront. This may be an optional method for determination of value, but you cannot provide a thumb rule without providing proper machinery, and therefore in absence of proper machinery levy will fail. That is also we have argued. But the learned department also said, one they have said that in these transactions the recipient will be the person is the importer according to revenue. What revenue has argued that this 293C, contrary to the assessee's argument that both these clauses are different clauses, are mutually exclusive. What they are saying that we are strictly fit into 293C, and 293 precisely says where no consideration is payable. So they are saying even though transaction is one, I am looking at the transaction from the point of view of the importer and the foreign shipping line. In those cases, there is no consideration is payable. So obviously Mohit Mineral, the importer in India, is not paying any consideration to foreign shipping line, and therefore in our case there is no consideration is payable. And the definition of recipient also says where no consideration is payable for the supplier, the person to whom the service is rendered. According to them, the service is rendered to the importer only, and in this transaction, no consideration is payable, and therefore recipient will be the Indian importer, and therefore whatever notification we have issued under 5.3 of the IGST Act is valid in law. That's what the first contention argued by the revenue. The second contention they have argued that if not under 5.3, even assume for a moment I am not covered under the notification issued is not covered under 5.3 of the IGST Act, still I can fit into the 5.4 of the IGST Act. And the reason being they argued that once there is a proper source of the power is there, whether it is traceable to 5.3 or 5.4 doesn't matter. And 5.4 says the recommendation of the council, they can specify a class of registered person who shall in respect of supply of specified category goods or services or both pay the tax on reverse charge basis as the recipient of the service. So contrary to 5.3, when 5.3 only specify category of supply of goods or services, does not say we will specify the recipient also. Contrary to 5.3, 5.3 provides for a mechanism where you can specify a registered person who shall be paid as recipient. So if our levy, our notification, if not sustainable under 5.3 of the GST Act, then IGST Act, then we can correlate with 5.3 of the IGST Act. That's what the contention argued by the revenue. And the court has held now. What court has agreed with the revenue's contention. First and foremost, they are saying that the definition of 293C, there can be two recipients. According to me, the judgment to that extent, even though it is Supreme Court, therefore I have to, this is the land of the law, nothing can be, but only thing, to that extent, the Supreme Court has committed an error. When it says there can be multiple recipients, it will be create a plethora of litigation, because when you say for one single supply, if you say that there are multiple recipients, who will be the person who will be claiming credit? Who will be the person who will be filing refund? And assume if some notification require the end use, that the end use this notification is based, exemption notification is based on the recipient of the service. Like for example, if government is recipient, then only your exemption will apply. In such circumstances, if you deem more than one person as the recipient of the service, it will be a chaos. But only thing is the Supreme Court also was aware of the situation. Therefore, they have loosely commented that the situation which we are concerned with, that is the transition where the foreign exporter and the foreign shipping line involved, the foreign exporter is not going to take credit, and therefore we are not concerned with the that part of the transition insofar as the present fact is concerned. But certainly, whatever this finding is a very crucial finding, that we can have more than two recipients, will have a multiple round of litigation. But rightly or wrongly, Supreme Court has held that the recipient will be the importer. They have also relied on section 13(9) of the IGST Act, which provides that in case of ocean freight service, the place of destination of the goods will be the place where the service is deemed to According to them, this notification 10 of 2017 is merely a clarificatory in nature by way of 293C of the CGST Act and deeming provision in 13(9). A deeming provision already been created whereby they have treated importer as the recipient of the service in India. There, according to them, the notification 10 of 2017 prescribed the recipient. That is only a clarificatory in nature. And they also held that not only we are upholding the levy under 5.3 of the IGST Act, we are upholding under 5.4 also. The only difference between, because 5.4 language was amended in 2019. So if at all levy would be sustainable under 5.4 only from 2019, but under 5.3 of this IGST Act, levy can be sustained from the very beginning. Gujarat High Court has struck down on both the count that recipient is the only person who is liable to pay consideration, and they have said that the notification is ultra vires section 5.3 of the IGST Act. But Supreme Court has overturned the decision of the High Court and said that notification has been validly issued. Another important ratio from this thing was the learned ASG has argued at length that the notification was issued after the GST Council recommendation, and the GST Council recommendation is binding on the state and center, and therefore notification has a valid this thing argued. But the Supreme Court has rejected that argument also. They only said the whatever GST Council recommendations are there, they only have a persuasive value. These are not binding in nature. They have also mentioned that with respect to some circumstances, like some section provides that with the recommendation of the council, only in those circumstances, GST Council recommendation may be binding, but it cannot bind the power of the state or center to legislate. Meaning thereby that tomorrow, the state can also say, I will not agree with GST Council recommendation. I will enact my own GST or any other tax which they want to impose. That will also create a chaos. If one state is not agreeing, another state, the very purpose to have an integrated one nation, one market, that will be defeated. But as of now, the Supreme Court has held that the GST Council recommendation are only persuasive value. Extraterritoriality, I already mentioned that that has also been rejected, and rightly so. Because in view of GVK industries, they relied upon income tax decision where they said that the court can have extraterritorial jurisdiction. There's no doubt about that. The legislature can have an extraterritorial jurisdiction. The only condition is the sufficient nexus, or the nexus should be a real. It should not be illusionary. This nexus should be real. And the facts of this case, where the importer is located in India, services are received in India, the goods are coming into India, there appears to be some reasonable nexus. And therefore, extraterritorial argument also been rejected. They also rejected the argument that valuation they have prescribed methodology, because in view of Rule 31, because our Rule 31 of the CGST rules provides that in case no other method provided, that in consistent with the principle of Section 15, we can determine the value, and nothing wrong when in terms of power given under Rule 31, if they are prescribing 10% of the CIF value as the value for reverse charge, nothing wrong in that. On that count, we cannot struck down the levy. So far, whatever has been argued from the the Gujarat High Court was entirely in our favor. The Supreme Court has rejected all the arguments argued by the SEC. Only on the last portion of it, they have said that initially we have told that revenue argued that the transaction is interlinked, meaning thereby that recipient, there will be two recipients. One recipient is of the foreign exporter, another recipient will be Indian importer, and transaction is integrated one. But when it comes to composite supply, the revenue argued that we are concerned with the two distinct transactions. One transaction is between the supply of goods from the overseas supplier to the Indian importer. That is the supply of goods. One transaction. Second transaction is between the supply of service from the foreign shipping line to the foreign exporter. We want to tax the second transaction. So therefore, the composite supply, when composite supply definition says two or more taxable supply goods or services are both, and the illustration also clearly says the goods are pegged and transported with insurance. Packing model transport will be, the goods will be the principal supply. So therefore, they have contended that when we consider the transaction between foreign exporter and Indian importer, he is supplying the goods also, he is also arranging the transportation. So therefore, when we see the transaction from the exporter's point of view, in view of the principle of composite supply, the amount charged by the foreign exporter will be forming part of the value of the goods insofar as the transportation is concerned. But they said, no, we are not taxing that transaction. According to us, what we are taxing is the transaction of the service, independent service of the service of foreign shipping line rendered to the foreign exporter, and we are only shifting the burden from the liability from the foreign shipping line to the importer in India. We are not concerned with the debt leg of the transaction where the foreign supplier is supplying goods to the Indian importer. We are concerned with the debt leg of the transaction where the service has been rendered. There is the distinct transaction. That's what the revenue argued before the Supreme Court, but Supreme Court has rejected the argument of the revenue and held that once, for the purpose of upholding the levy under 5.3, you have argued, revenues argued these are integrated transactions, and we have agreed, and Supreme Court agreed with their submission that yes, it is an integrated transaction. Now it comes to composite supply. No, we will treat these as a different transaction. That Supreme Court said that we will not allow that to happen. For the purpose of upholding levy, we have said the integrated transaction, and therefore for the purpose of composite supply also, we will held that this is a integrated transaction only. And having said so, when the value of the transportation service has been merged into the value of the supply of goods, this is a supply of goods only, and the importer has paid IGST on the supply of goods as well as the transportation service. Having paid so, now second time you cannot demand tax from the Indian importer, and therefore it will be in violation of principle of composite supply in view of section 230 and 8 of the CGST Act. So that's the only finding. So some people are saying that Supreme Court has held on the ground of double taxation, that once you have paid IGST on the imported goods, thereafter you cannot levy the second transaction. According to me, that is not the ratio of the Supreme Court. Supreme Court has not held so. There are some, even though they are relying on BSNL and some other judgment of double taxation, but ultimately they have held that this transaction is in violation of principle of section 8 of the CGST Act only, and not on the ground of double taxation. And therefore, as of now, therefore, Supreme Court held that levy is not maintainable. They have not held it unconstitutional. Whatever Gujarat High Court has held, the levy is unconstitutional, but the Supreme Court has not held the levy to be unconstitutional, but only in violation of principle of composite supply. So we will take some practical situation. What if? What are the difficulty in arising implementation of this judgment? So few questions I have listed on my own. So we will see that. So far clear, sir? Anybody can please confirm? Anybody from the admin or something? So far it is clear, not clear? Hello?
Yes, sir. Clear. Please proceed, sir.
Sure, sir. So few questions I have listed, sir, on my own. Like now, therefore, if somebody has not paid any GST for the past period, then nothing is due to be done, because as of now, Supreme Court has held the tax is not payable. What will be the situation if you have, in the past you have paid the GST and you have availed the credit also? So can revenue say that in view of the Supreme Court judgment, the tax itself is not payable? Therefore, whatever tax you have paid is not in the nature of tax on any supply of service to you, and therefore we will deny you the credit. That's the one of the concern. It's not the case academic only. They have raised, as a matter of fact, in service regime, they have raised such absurd allegations also, absurd contentions also. But the answer to that would be, once you say that tax itself is not payable, therefore whatever tax I have paid and taken credit should be treated in the nature of refund of the service tax, refund of the GST, which is not required to be paid. And to that extent, we can rely upon the decision of the tribunal as well as the Supreme Court in Mahalakshmi Textile, as well as the service decision in the case of Bajaj Airlines. So that will also not be in this thing. But if any of your client has paid GST but not availed credit because your output is exempt or any other reason, whatever the reason may be, if you have not availed the credit, whether what can be done with respect to that amount which has been paid. So two questions may arise. One is the time limit, and another is the unjust enrichment. Whether you can file, your client can file the refund claim in such circumstances. Obviously, yes. Now the Supreme Court has held tax is not payable. Therefore, time within the time, those time limit provided is only 2 years only in section 54. So you can file the refund claim within 2 years. You can also take support of this Sayer supply chain, the Bombay High Court decision, where they said that the suo motu extension is not only applicable on respect to appeal reply, but apply in respect of refund also. Though their department circular says it will not apply in the case of refund, but the Supreme Court, the Bombay High Court judgment has made it applicable in the case of refund also. So not only 2 year period you will get, apart from that, whatever the COVID period is also, that also you can get. And second question would be one decision of Gujarat High Court in Cosmic Energy. There they were taken a view. Justice Pardiwala only has written this judgment, but that was prior to Supreme Court decision on ocean trade, where they said the levy has been held unconstitutional by Gujarat High Court. And once the levy is held to be unconstitutional in view of the Mafathlal judgment, once the levy is held to be unconstitutional, time limit provided in the statute will not apply. That will be governed by the Limitation Act. But I don't know. I'm not too clear that because after the judgment of the Supreme Court, and Supreme Court has not struck down the levy, they have merely said the in violation of principle. Why I'm emphasizing on that point? Because when you are going to claim the refund claim, you will be going to face this practical difficulty also as to whether they have struck down the levy or whether they have said it's in violation of principle of compulsory supply. So rightly or wrongly, my advice would be whenever you are facing in such situation, you should file two separate refund claims. One refund claim which is within normal period of limitation and limitation of 2 years, and second another refund claim which is beyond the normal period of limitation but within the limitation period provided in the Limitation Act. So you have to file a separate claim. And going forward, I don't think you have to be over complied with it. Because once Supreme Court, because after Gujarat High Court also many of the people are asking whether once Gujarat High Court held unconstitutional, whether we should stop paying taxes. So we have advised no, because the Supreme Court has to take ultimate call on that. But now Supreme Court has taken a call, irrespective of anything. Now, because they may deny the credit also, if you pay the taxes, credit can also be demanded. So no need for you to be over compliant. Therefore, you should not, according to me, you should not pay the taxes. Another issue whether it can be retrospective amendment. Yes, the government can come up with a retrospective amendment in the form of they can amend the definition of compulsory supply to say that the principle of compulsory supply will not apply insofar as the ocean trade is concerned. Now, just like one thing was there when the blind people are seeing the elephant for the first time. So each one is saying, okay, elephant looks like this. When he touches the tail, elephant looks like this. So here also, even though many of the people are saying it's a welcoming judgment, but there are some companies who said the judgment of the Supreme Court is to kill us only. And the reason also, because most of the cases in the form of these PSUs companies, which are importing the crude. So they are now, their grievance is now, Supreme Court has only held that this is in violence of, in contravention of principle of compulsory supply. We are importing crude or petroleum product. Whether on petroleum product, whether any the principle of Supreme Court will apply in those cases are also or not. For that, we need to again see the definition of compulsory supply, which says consisting of two or more taxable supplies. So taxes should be have been leviable. So in case of petroleum product, GST is still not being levied. So if that being the case, then it will be very difficult to argue that this is in violation of 230 compulsory supply, and the PS company for importing oil may not take the benefit of this judgment. Another category will be the exempt supply. When no output GST is payable, their principle of compulsory supply will fairly apply, because exempt supply is also tax is leviable. Thereafter, by way of exemption notification, levy is exempt. Therefore, the principle of compulsory supply will equally apply for exempted goods, and Supreme Court will fairly apply. An impact of treating more than one person as recipient, as I said, there will be a lot of chaos. Multiple people may claim that I am the recipient of this service. I will claim refund, I will claim credit. So that will be a very, very difficult situation. Another issue will arise is whether in case of FOB contract, whether the principle of Supreme Court will apply with the FOB contract or not. Because in FOB contract also, in that sense, the importer in India are paying the GST, including the value of the transportation. So therefore, again and again, repeatedly, I'm saying that the Supreme Court has not held levy to be paid in law on the ground of double taxation, only a violation of principle of compulsory supply. So in case of FOB transaction, one transaction of supply of goods between foreign exporter and the Indian importer, another transaction of supply of service between the foreign shipping line and Indian importer. So Indian importer is the privity of contract, and it is settled that the supply made by two suppliers, because one supply of goods by the foreign exporter, another supply of service by the foreign shipping line cannot be fused together. Therefore, the principle of compulsory supply in those situations will not apply, and therefore, according to me, in FOB transaction, you have to liable to pay even after the judgment of the Supreme Court. That's my personal view. There may be some debate on that, rightly or wrongly. According to me, it will not apply in FOB contract. And the last issue, what will happen to the service tax? Because many of the reply pending at various stages, adjudication, tribunal or something. So first and foremost, one thing is very clear: this Supreme Court is not going to help anything with respect to service tax. One, if at all, because there are some observations in the judgment which says that the situation in the service tax was different, because here we are playing from the language of the word by the recipient under 5.3 of the IGST Act. But in service tax, then in section 68(2), they said any person, not a recipient or service, any person we can deem as a person who is liable to pay service tax. And therefore, they need not have to specify only the recipient. Anybody, then in service tax regime also they have made importer as liable. But there again, only thing is you can argue on the extent of limitation. If the tax is still not paid on ocean trade, according to the service tax regime, now you do not have to pay because the limitation period is going to be over. Even if it is a matter is pending in litigation for various forum, even then whatever is the extent below limitation, that also you do not have to pay, and rest of the amount you need to await the judgment of the Supreme Court in SSS Steel, where the levy of GST, levy of service tax on ocean freight is pending. But that, according to me, is a very, very weak footing in so far, because 68(2) clearly says that they can make any other person as a person liable to pay service tax. Therefore, the constitutionality of that provision, service tax will be very, very difficult. But extent period should not be invoked. In those cases, we can advise that you should not pay any service tax at this point of time. So these are the few implications, repercussions of this judgment, which I thought I should let you know. So now, anybody has any other questions? I'm happy to take it now itself. Somebody has said, sir, whether client need to pay RCM now on ocean freight or no. According to me, insofar as the CIF contract is concerned, insofar as the transactions are leviable to GST and the principle of compulsory supply will be applicable, in those cases you should not pay. You should not pay GST at this point of time. You should stop doing that. But other cases where there is a doubt, like for example in petroleum product or FOB contracts, there you should be paying. You can also file a letter that I am paying in the protest. As and when if something turned in your favor, you reserve your claim to file refund claim. Other than that cases, you should not pay. Any other questions, sir? Any question from anyone? You can raise their hands or something. I hope I am clear, sir. Hello.
Yes, sir.
If, sir, anybody has, because whatever possible objections or questions I have listed down on my own also. So you have the benefit of whatever this thing I answered. But apart from that, also, if any of your clients are having any query with respect to this judgment, you can ask later on also. But better if you ask this point of time, because for the benefit of all of the participants. Anyone has any question, we can take up, sir. But
I think we can proceed, sir.
sure, no
If
problem.
members have any query, I think they'll be
They
putting
can
at
put
the
in chat box also.
Yes.
They can ask also. Even
Sure.
after the session also they can ask, no problem. But whatever problem has been anticipated, as I saying already, I have included as a part of this presentation.
Correct,
Most
sir.
of the
It's
answers already
exhaustive, sir.
given.
Yeah.
But still you have some doubt. We are happy to. We'll move on to the next, sir.
Yeah.
The next question is the secondment of employee. There again, as a tribunal lawyer, we were very confident that the issue, at least in service tax, is settled. And why we are saying so? Because there are n number of CCT decisions in our favor. Some cases, Revenue has filed an SLP or a civil appeal for the Supreme Court, and their civil appeal or SLP has also been dismissed. Therefore, we were very sure that at least this transaction, at least in service tax, there are some judgments which are attained finality. But we were wrong. But even after the dismissal of the civil appeal by the Supreme Court, now Supreme Court has overturned all the decisions on this deputation and held that in deputation service tax is required to be paid. So very briefly, I will mention the facts. So here, this Northern Operating Trust was a company in Bangalore. It has an overseas parent outside India. The Indian company was rendering a business support service, back office support service to the overseas corporation. For that, the overseas corporation was paying them on cost plus markup basis. The Indian company was reimbursing them and claiming this is export of service. Now, in view of, because we generally seen because of the shortage of skilled manpower in India, people generally come on deputation. So here also people are sent for deputation in India, and people are working under the Indian company. There's an agreement between Indian company and the employee, which categorically says, kindly to be noted, which categorically says that the employee which is deputed from outside India to the Indian company will be deemed to be the employee of the Indian company. The Indian company will have a control on this thing with that employee. The Indian company will also deduct TDS on the amount, whatever amount of salary to be paid. But because of the social security benefits, it's a general practice that the overseas corporation will continue to pay social security benefits from outside India to the concerned employee. So that practice was going on and thereafter, because since the employee are working for the Indian organization, the overseas corporation, whatever amount of PF, gratuity, or social security benefits in those countries which has been remitted by the overseas corporation, that used to take a reimbursement from Indian company. So that was the precise thing. The precise question was twofold question. One, whether the foreign corporation is rendering any service to the Indian corporation by way of supply of manpower service. That was the one question. Another question was whether any consideration is there or not in this type of transaction, because as such, in these facts of this case, there are some markup has been charged for 10% or something. So apart from that markup, whether the pure reimbursement of salary per se can be a consideration for the service. So that was the contention. The contention which we have argued before the Supreme Court was there's an employer-employee relationship between the Indian company and the employee which are deputed. And once it is the employer-employee relationship, it is excluded from the definition of service in 65B44, that any service rendered by the employee to employer will be outside the scope world over. One service which has never been taken by any of the country in the world is the employment service. So that has been excluded. And apart from that, there is no consideration, because what the foreign corporation is doing is mainly making payment on my behalf. Ideally, I should have paid them. I should have paid social security benefits, but if I pay them, their social security benefit continuance will not be there. Therefore, only for that limited purpose, they will be on the payroll of the overseas corporation. And therefore, for all practical purpose, these are my employee only. I am deducting TDS. I am issuing form 16. I am paying them, and they are working for me only. They are not working for the overseas corporation. All these facts suggest that these are my own employee only, and therefore tax is not liable. But the Honorable Supreme Court has overturned all the CCT decisions. Here again, they are saying we will go by the substance over the form. in this. So we are also actually discussing among ourselves. So when the Supreme Court has said that here they are saying the overseas corporation is the real employer, and why they are saying is in all these deputation transactions there is a lien of the employee that after the deputation period is over, that fellow can go back to the overseas corporation, and that fellow has the lien over that employment. The Indian employee has the lien over the overseas corporation's employment. That is one. Second, Supreme Court has held that the Indian company does not have any power to terminate the employee from the employment during the period of deputation. And Supreme Court has laid down that these are very highly skilled employees. Therefore, the control test, which was prevalent earlier, because all the jurisprudence as to whether the contract is contract of service or contract for service, contract of employment or contract for employment, is the jurisprudence is developed on various in labor law also, income tax also, and other things also. And everywhere like this control test is not relevant insofar as the highly professional skilled person are concerned. This control test was prevalent at 90s or so, but now it is no longer relevant. We will go by the substance over the form, and these are the real employees. As such, apart from ignoring the fact, apart from discarding the fact that control test is not relevant, according to me, Supreme Court has, as such, does not lay down any principle as to what should be the principle which we should apply in a given case to decide whether the employer-employee relationship exists or not. They are merely going by substance or the form. But if you go really by the substance, in substance, these are employee of Indian corporation only. Because if you go by the form also says contractually when the Indian employee has given a contract of employment, that says that this will be treated as my employee only. Therefore, not only on the form, not only on the substance, but form also in this case, they were treated as employee of the Indian corporation only. And in substance also, because the way I am complying with the TDS requirement, the way I am complying with the forms, issuance of Form 16, and the way I am exercising the control over that, that's in substance, the whatever so-called the principle applied by Supreme Court in substance over form, according to me, that has been wrongly been interpreted. This may at some point of time, because these are also larger, these are 3-member decision, unlikely to be settled in a very short future of time. But at some point of time, it may overturn. It is also not noted because we have cited one income tax decision, Carborundum and Company, which is also been affirmed by the because Madras High Court decision was there that says these are employee of overseas corporation only in deputation, similar circumstances. That has been overruled by the 3-member judge of the Supreme Court in Carborundum Corporation. That also we have cited before the Honorable Supreme Court, but Supreme Court has not taken any cognizance of that. They have not even noted that decision in the thing. But therefore, as of now, they have held that in such situation, when the Indian employee has a lien over the employment of overseas corporation, Indian employee cannot terminate, Indian employer cannot terminate the employee which are on deputation, and more so when they are working exclusively for the overseas corporation, for the work of overseas corporation. In those circumstances, we held that these are a supply of manpower only. And they also said consideration cannot be in the form of like even if you pay salary, because we have seen many cases where in case of manpower supply, whether the consideration only will be the commission, is the manpower supply is charging, or the including salary also. There the courts has taken a consistent view that it will not only the commission which is being charged, but also the salary also will be included. And therefore, the Supreme Court has also held that merely because some consideration separately not being paid, whatever the salary has been paid, that itself, not so expressly they have said so, but impliedly they have said so. And also they have said so that because the Indian company is working exclusively for overseas corporation only, therefore the consideration as such is inbuilt in overall scheme of the things, and therefore consideration is very much there. Therefore, in deputation, the Indian company is receiving the service from overseas corporation and tax is leviable. So that's what Supreme Court has held. We have also cited commentaries from the US, UK weight laws, where they specifically say that pay master services, service called pay master service. What is that? That overseas corporation, for the purpose of disbursement, they will make disbursement. What is the service rendered by the overseas corporation is the disbursement of the social security benefit in the account of the overseas employee. That's all. The question as to whether they have charged any consideration for that, answer to that is no. They have not charged any consideration. That is the only service which is being rendered. But rightly or wrongly, these are Supreme Court, and the Supreme Court is final, unlikely to be desettled in the near future. And more so, this judgment does not have any ramification on the equally and directly will apply in GST also. And they have also rejected the argument of revenue neutrality, because we have argued that I am the 100% exporter. Therefore, if that period of time, if I would have paid the service tax, I would have taken credit, and I could have filed refund claim, and I could have got the money. Therefore, the situation is revenue neutral, and in such situation of revenue neutrality, tax should not be leviable. That's what we have argued, but that argument also been rejected on the footing that at this point of time we are concerned with the output transaction of supply of manpower only. We are not concerned with the availability of credit or anything, and therefore will not go into it. However, they have said that action period of limitation will not apply, obviously, because when there are plethora of judgment in the service segregation by the C state, and some are also have the blessings from Supreme Court. In such situation, there can't be any intention to evade payment of taxes, and therefore the action period of limitation, they have set aside the demand. So now again we have listed some likely issues. So what is to be done for future transition? So the my advice would be in those circumstances wherever the credit is available, because this will not only implication so far as the MNC company is concerned. This will have a ramification in group concern where the Indian concern is sharing the employee. The judgment will have a bearing on those cases also. And obviously in every every MNC this deputation business is there, so they will be directly impacted. In India, where the group companies are there and they are sharing employee, there also the judgment will have impact. So my advice would be wherever the credit is available, to the other company, there is no loss of credit. You have to pay it, and otherwise also rightly or wrongly, the Supreme Court has held so. You can try your luck if your facts so support that you can say that the overseas corporation does not have any, the employee does not have any DL, employee has cut off from the overseas establishment and become joint part and parcel of Indian this thing only, or the Indian company has a right to terminate. Those cases you can take a informed call, but even in those cases, my advice, so long as the credit is available, you should not go into litigation. They should pay the tax on this deputation transaction, whether it's Indian or foreign deputation, and take rate only. So these are some of the things where we can distinguish, but whether already I have commented upon. One question which may arise, that instead of like overseas corporation making this payment, if I route every transaction from India only, so I will pay entire amount to the employee in India. I will not pay any transaction to the overseas corporation. In those circumstances, whether reverse charge can apply is the question. Answer to that is, even in those circumstances, tax will be leviable, because the question who pays to whom is not relevant. The question is who is rendering service. So if according to Supreme Court, these are employee of overseas corporation only, and if overseas corporation is rendering services to Indian company, in those circumstances, irrespective of fact, whether you pay directly to the employee or directly to the overseas corporation, or you directly pay to the social security department, will not make any difference, and they are liable to service tax or GST as the case may be. Another question may come is, if in this case there are skilled employees, what if the unskilled employees are being deported? There again, you can argue, because Supreme Court in their own judgment says that no straight jacket formula can be laid down, because these are very, very difficult as to whether it is a contract of service or contract for service is a very, very difficult. There's no straight jacket formula can be provided or prescribed in these kind of situations. And therefore, according to me, if the deputation is of the unskilled person, the control test will still continue to be relevant even after the Supreme Court. And those circumstances, we can argue that tax is not leviable, but again, subject to if credit is available, pay tax and relax. If credit is not available, then you can contend otherwise. So another issue is, like, the circular was issued by CBIC, where they said that the director remuneration, the TDS is deducted under income tax under section 192. Then we will treat this as a part of salary only. And if TDS is deducted under any other section, 194J or something, then these will not be treated as a consideration for employment service. There will be consideration for separate service, and there again tax may be leviable. According to me, this judgment will have a bearing on this circular also, and nobody is going to accept the circular in that sense. If this is only simply going on the premise under which section you have deducted TDS, deducted under 192 it's salary, deducted under 194J it's not salary. So that also will be questioned, certainly by the revenue authority and certainly by the courts. Obviously, the circular is not binding on the courts, so the courts are bound to take a decision. Therefore, all the more reason not to solely rely on this clarification. You have to go by substance and then see whether your contract will contract of employment or contract for employment. Independently, you have to see. Don't rely only on the circular. The next question may come that now we already 5 years has been elapsed after the introduction of GST, and what if the companies has not paid any GST for the last 5-year period? So what is the solution for that? Whether they can pay tax now? The answer would be yes. They can pay tax under protest in order to save on future interest liability. One. Point number two, they can also avail credit also. But two possible contention revenue can raise. One is section 16(4) of the CGST Act, which prescribed a time limit that you have to take credit within 1 year, whatever, like before 9/30, before September next year, you can take credit. That is a one hurdle. But that thankfully that says in which the invoice pertains. Invoice or debit note pertains, not where the supply was made. So in this case, assume for a moment in 17/18, in that sense supply was made, and you are issuing invoice or debit note today. Then according to me, the time limit will apply from the invoice date, that is today's date, and you can take credit based on such invoice or debit note. The second contention could be raised for section 17(5)(I). What is that? That provides that in case of any fraud, suppression, nullified intention, in those cases the credit can be denied. But in this case, when credit is available, and I am, as a matter of fact, I am paying tax and now taking credit, and there are so much of litigation was there. According to me, even if they allege so, that content is not sustainable in the courts of law, because you don't have any separation to evade. You are bona fide believing that these are employee transactions which are excluded from Schedule 3. But now, in view of Supreme Court judgment, there is a dent on your view, and therefore, in such circumstances, there can't be allegation of separation, malevolent intention. Therefore, 17(5)(I) also should not apply. Therefore, in such cases, you can advise to make payment so that interest meter will be stopped. Secondly, you can take credit also. What if the service tax is paid today and refund can be claimed? Because there are a number of assessments for which the service tax shock orders are pending with various forms in adjudication, instead, some are pending in Supreme Court also. There again, you can pay tax to stop the interest meter under protest, and whatever is beyond the normal bit of limitation, that you should not pay, because Supreme Court themselves held so. Whatever the amount is within normal bit of limitation, that you can pay under protest, and thereafter you can try your luck under 142(3) and 142(6) of the CGST Act. So even though directly both these provisions does not provide, because the tax was to be payable in 2016-17 as the case may be, now you are paying. Now GST has come. Had GST would not have come, you would have taken credit. But in view of GST, the authority may say that we can provide the whatever being provided in the transition provision, that alone we can provide. This is not being provided in the transition provision under 142(3) or 142(6), and therefore we will not allow the refund. But that can be certainly argued, because there is no, like, you pay the tax and thereafter you don't want to file refund. That is not the proper solution. You try your luck, and as a matter of fact, in this Madras High Court, Gangs International has held that it can't be the case that they have applied the doctrine of necessity. That even though there is no statutory or transitional provision provided, but when section 174 says whatever concluded transition will be saved, repeal and saving provisions are there. Therefore, we have to give the refund. They have, in that sense, they have allowed the refund, and there are a couple of state decisions also holding that the service tax was liable earlier, but now it has been paid. you can file different claims. So you can try your luck. Apart from that, not only on service tax and GST, this judgment will have a bearing on the income tax also, because one of the judgments they rely on Morgan Stanley income tax. So from income tax point of view, what will the implication? Because as of now, the Indian company is deducting TDS on the whatever amount of salary paid to the employee. Now, income tax department turn around and say that these are employee of overseas corporation. So therefore, overseas corporation has to deduct TDS. But that is also in that sense quite manageable in that sense, because one fellow has deducted the TDS, whether it's the Indian company has deducted or overseas corporation deducted, it will not make, in that sense, in law, somebody has deducted. Therefore, we can argue on the ground of molding of relief, that you mold the relief even though Indian corporation is deducted, but since the one person has deducted TDS, we don't ask the overseas corporation. That is little easy to overcome. But another issue which may arise is now they can say that the overseas corporation is rendering technical fee for technical services, and therefore the Indian company should have deducted TDS under section 194. Whatever amount Indian company has paid to the overseas corporation, the income tax department can come to the Indian company and say, you have not deducted TDS on whatever amount paid to overseas corporation. You are required to deduct TDS on that. And another issue may arise whether these employees which are deputed in India will create a service PE of the overseas corporation in India. The way Ton and Toner the judgment is written and the way they have relied on Morgan Stanley, tomorrow income tax department also can say that the one establishment is created in the form of employees of overseas corporation. So these will some implication which may arise in income tax also. So these are the some of the possible issues which arise in service tax, GST, and as well as in the income tax. According to me, these men can arise, and I have also let you know provided the probable solutions for that. But still, any one of you have any answer with respect to that? I am happy to answer.
Sir, I have one question.
Yes, sir.
Can this judgment be or interpretation of this judgment be stretched to an extent to say that in case of common group employees, common employees is CFO and stuff like that,
Correct.
in case of groups or even for registrations, multi-state registrations, I can assume that there is a deemed deputation in that case, in the absence of an agreement and stuff like that, and then that cross-charge implications, can that this judgment be stretched for that interpretation as well?
Certainly, sir. They will all the more reason, because when the employees of the overseas corporation on exclusive basis is working for Indian company, even then the judgment has held that there is a rendition of service from overseas corporation to this corporation. If that is the case, then this group deputation, when the one company, when the employee is working legally employed under one employer, and contractually are even he is for practically are actually working for the various corporate various group concerns, the ratio of the judgment will apply in greater force, according to me.
So this will in a way support the taxability of cross-charge as far as the employee services or employee cost is concerned.
Correct, sir. But as of now, sir, I am only telling with respect to group company, one holding subsidiary. I am not saying with respect to the distinct person.
Multi-state.
Yeah, distinct person. I am not commenting anything on that.
Sure.
There, I think one slide, one judgment is there. There we will discuss in detail, sir.
Sure.
Suffice to say that in case of group concern holding in India, this judgment will apply with greater force. Not only ratio will apply, but with greater force.
Sir, for all practical purpose, the Indian company is the economic employer of the employee, right?
You are absolutely correct,
and
sir.
Only for the, limited purpose of lien on the employment, the Supreme Court says that it is, I don't know,
Correct. You are absolutely right, sir. In fact, sir, who said a person can be employee of one corporation only? The joint employment is equally possible.
Possible. I'm not saying that, but see, for this purpose, in this case, the entire, all control were managed. All control were exercised by Indian company, and economically also they were paying to the employee. They were the economic employer of the employees. Then also, whether they can be considered as an employee of the foreign entity who is seconded them.
I am totally agreeing with you, sir. I can understand your grievance. I am totally agreeing with you. And that is the reason, sir, I said when they are applying the substance over form principle here, you apply substance. What is the substance?
Substance is the substance, sir. Here, substance is the Indian company is that a true employer of the.
Correct, sir. Correct. Absolutely correct. Absolutely correct. But unfortunately, these are larger bench of the Supreme Court 3-member judge. So therefore, it will prevail as of now, sir.
Sir, had the decision would have been changed if there was no, I mean, service rendered to the principal employer. In this case, this is service were rendered to the group.
They are in that sense very prejudiced. According to me, they are prejudiced with the fact that these are a group company and the entire emphasis was on the rendition of service to principal overseas corporation.
Correct.
The company was wholly exclusively for working for the overseas corporation only, and therefore, but that also, even if so, assume for a case, take an example where the person are coming from overseas corporation and they are doing business in India. But no service, the Indian corporation is not rendering any service to overseas corporation. In this fact, that was the fact, but assume for a moment that is not the factual situation. The overseas corporation are rendering service to the Indian companies rendering services to the Indian subscriber, Indian companies independently.
Correct.
What will be the situation in that case, sir?
That is what I am asking, because in this case they allege that consideration is inbuilt. So in case of which we are discussing, the consideration will not be inbuilt, no, because we are rendering service to the third party.
But one of the observations on consideration, they said 2 points. One, the consideration is inbuilt in the overall scheme of things, which I don't understand what is the overall scheme of things.
Correct.
That is one. Second, they have said that whatever the salary, whatever amount is being paid is one form of consideration. That line, again I said, that is also not very clear. Not very clear whether they are saying that whatever amount of salary which is being paid, that is itself is by consideration. That is the judgment does not clearly state that, because we have also argued and succeeded that here because the salary, if at all that fellow is paying only salary on my behalf, therefore the activity which you said, what is the activity done by overseas corporation is the disbursement of the salary, disbursement of the payment. And for that, there is no consideration. The very fact of payment itself, suppose you ask me that Vinay, you remit this 1 lakh rupees to the Institute of Chartered Account of India, and I will pay to the Institute of Chartered Account of India. For that, if I charge some consideration, I say, okay, I will charge some administrative fee of some 1,000 rupees. So what my consideration for the service will be 1,000 rupees. But whether somebody can say that 1 lakh rupees itself will form part of the consideration, that is according to me, sir, erroneous.
I think that is where they were, prejudiced by the fact that the service was rendered to the group companies only, and the consideration is inbuilt, kind of.
And more so, sir, from the judges, that Honorable Judge Ravindra Bhatt, he was from the Delhi High Court, and he himself has authored a genre of Centuica, income tax. There, I think,
correct.
So there, I think he has taken such decision. He applied the decision here also.
Correct.
But one thing is clear, that corporation judgment also we can cite, because that is not being cited here, because that is also of the 3-judge bench of the Supreme Court only. Based on that, we can try to distinguish, sir, but Supreme Court 3-judge bench to be overturned will be a long drawn battle. So at this point of time, we cannot solely rely on that and advise the client that it may overturn at some point of time.
Okay, got it. Thank you, sir.
Any other questions, sir? We move on to the next, sir.
Yes, sir.
Next judgment also, sir, VKC, where they inverted to the structure. There again, we have succeeded the matter before the Gujarat High Court. In the Gujarat, most of the favorable judgments in this constitutional variety and this is from Gujarat High Court only. So we also prefer filing petition in Gujarat High Court. Bombay, it's very difficult. Bombay constitutional variety generally they uphold only, or generally do not hear the constitutional variety. It will take long time. So it will be easy for the petitioners to approach High Court in that sense. And most of the judgment, rightly or wrongly, the judgment are in favor of assessing only. So here also in VKC, we have succeeded before the Gujarat High Court. The issue was simple, where the in section 54(3), Section 54(3) provides for refund of the accumulated standard credit. So it provides that in two circumstances, the refund will be given. One, in the case of zero rated supply, your is export of service or export of goods. Second, when the credit has accumulated on account of rate of tax on inputs is higher than rate of tax on output. So your output is 5%, your goods input is 18%. In such circumstances, because we don't want the cascading effect, because ultimately credit should not be the burden to the this thing. Burden should be the taxation burden should be the ultimate recipient. And if you allow the credit to be remain at the unutilized at the end of the recipient only, then it will become a burden for the business, and therefore we want to refund it. The only question here was when it says where the credit is accumulated on account of rate of tax on inputs is higher than output supply, whether the refund of the only input service is allowed or only inputs is allowed was the question. The question is clear. Here only just for the mention, we have succeeded before Gujarat High Court, whereas the Madras High Court has taken a counter review. Both the judgment has travelled to Supreme Court. Here again, when 89.5 says, the earlier 89.5 says net ITC shall be an input tax credit available on inputs and input service. Initially, when the rule was introduced, there is no condition on inputs. Now they are saying inputs and input service was there in the beginning, but later on they have made a retrospective amendment and they have only said net ITC shall mean input tax credit on inputs. So we are arguing when 89 provides that net ITC shall mean credit available on input, that 89.5 is contrary to section 54 of the CGST Act. The reason being, we are saying that 54.3 provides a qualifying criteria that in these cases. So what are the argument of the SSC? What we were saying that if you see the 54.3, it says subject to the section 10, a registered person may claim refund of any unutilized input tax credit. So we are emphasizing on the point the word any one. Second, it says unutilized input tax credit. And input tax credit has been defined to mean inputs also and input service also. Second. Third, we were saying that no refund of unutilized shall be allowed in cases other than. So in cases means in circumstances. Apart from this, therefore, the endeavor was to show that this is not a providing a quantity, quantum is not being defined. What it is saying is in cases, in circumstances, where the credit is accumulated on account of mean by reason of, by account of mean on reason of. Here again, there is no quantum. Rate of tax on inputs being higher than the rate of tax on output supplies. Therefore, on all these contents, we are saying that nothing in the section 54 which restrict the claim only to the inputs only. And also, we are like when the word used is on account of rate of tax on inputs. When it says inputs, what is been defined in the CGST is only input. Inputs is not defined, and inputs in the larger sense, because in service regime also one definition of business obligatory service was there. There it says procuring of goods which are inputs for the client, and in there defined inputs will mean input also as well as input service. We are saying here inputs will include input service also, and even otherwise also, even if it does not so include, this will only a qualifying criteria that in such a case we will allow. Why they have prescribed so? So if they would have prescribed for input service also, practically every case will put into this inverted rated structure. Why? Because there may be many services which utilize 18%, whereas 5% cases every so your output goods is 5%, input is also 5%. But every person will receive chartered accountant service. If he receive chartered accountant service, chartered accountant will charge 18% GST. If he charge 18% GST, every SSC will claim this refund. The purpose was therefore to restrict the refund only in the cases where the rate of tax is higher on inputs. But that does not mean that we will deny the input service also. There is only a qualifying criteria, not restricting condition. That's what the argument which we have put forward before the Gujarat High Court. Gujarat High Court has agreed with us. This I already mentioned to you. These are the contentions we have raised. And we have also, in that sense, argued that when the purpose is to avoid the cascading effect and you want to achieve the fiscal neutrality, that can be achieved only. So, whatever principle you are applying for the refund of the input should equally apply for the refund of input service also. Because if the purpose is to avoid the cascading effect, you have to avoid the cascading effect for input service also. So, if you are only doing only for inputs and not for input service, then the cascading effect will not fully remove. And also more so when 54 there is no such restriction. But court again now overturned the decision of the Gujarat High Court, and they said we cannot read the inputs to include input service also. According to them, if we do so, that will amount to violence of the plain language of the section. According to them, when the word says inputs, see the reference to plural will include reference to singular, and therefore here, even though word is inputs, it will refer to inputs only. And more so, they are going by the word that other two proviso of 54.3, which says provided that no refund of input unless will be allowed in cases. And third proviso also says provided no refund. So they are saying when they are using double negative, this thing, the intention was very clear to restrict the availability of the refund. There again, the court has held that it will apply only in the case of inputs only and not with respect to input service. And these are read with the in scheme of the 54. When other proviso is a restrictive clauses, that means shows that the quantum has been reduced. In principle, in that sense, they have also agreed with us that the cascading effect should be removed. But they have said that it's for the legislature to decide. We cannot step into shoes of legislature and do so. And they also, therefore, they have said we are also in that sense marking copy of the judgment to the GST Council for them to take an informed call on this. But as of now, we cannot extend the credit. That's what they have held. So as of now, so far as the inverted duty structure refund is concerned, that will applicable only in the case of input service allowed. Another alternative argument, what we have, one argument is section 54.3 does not maintain anything with respect to the quantum. Second argument, we have said that when you define this maximum refund amount says turnover of inverter rated supply of goods or services into net ITC divided by adjusted total turnover. So assume my inverter rated supply turnover is 500 rupees. My total turnover is 1000 rupees. My net ITC on inputs is 200. Therefore, if I apply this formula, what will 500 divided by 1000 into 200 equals to 100. What does 100 represent? The 100 represents proportionate amount of credit which is pertaining to inverted rate supply of goods. That's 100 rupees. And thereafter, if you remove the tax payable on such inverted rate supply of goods, they are removing the tax payable on such inverted rate supply of goods, meaning thereby on 500 rupees, whatever tax is payable, we are removing. But while removing so, we are making an assumption that the entire amount is paid through inputs only. So if your because this NVAT credit ITC is a common pool, it consists of input service also, inputs also. So therefore, to assume that the entire amount of tax on inverter supply is paid through inputs only, and thereby you are reducing my eligibility, that is also in bad in law. We have argued income tax decision in Lakshmi Machine Tools with respect to 80 HHC when it says that when the formula is prescribed, you have to schematic interpretations to be given. Formula is to be the purpose of this thing should be advanced. But there again, Supreme Court has said no. The practical implication of the formula may result some in disparity, but we are not the correct forum. That is the GST Council to decide. On that ground, also they have decided against him. So as of now, therefore, in view of the VKC judgment, in so far as the inverted duty structure is concerned, credit of input alone is entitled, not of the input service. But I believe there are a number of representations already being gone to the GST Council, and you can also, subject to your client fact support, then you can also join in. Any questions on this judgment, sir?
So we can continue.
Somebody was asking, sir, in case of refund of LUT export, ITC on capital goods is excluded in rule and not in section. But for similar transaction on payment of export like ITC and CG for payment of IGST gets refund, whether LUT expert can argue that refund of ITC on CG should be eligible. That according to me is very, very difficult, because when they are saying inputs means inputs only and only, therefore to say that even in such circumstances capital goods also can be extended will be very, very difficult. Should we move on to the next? One.
Yes, sir.
Now these three are the more major Supreme Court judgments.
Sir, sorry to interrupt you. On the previous question that Nihar put in the chat box, that on the capital goods, where with payment capital goods ITC indirectly we can get the refund, but without payment we cannot get that refund. So can this differentiation be tested in terms of Article 14?
Certainly, sir. Certainly, you can. No, but they may say that whatever has been scheme and prescribed for two type of scenario. If you are not, what is your difficulty in that sense? It may, in that sense, a discrimination on the part of this thing who don't want to claim the whatever reason they don't want to claim the output taxes, but they want to claim only of the LUT only. But this is a good ground to contest. According to me, this can be argued that this is a clear-cut discrimination. Person who is claiming on output taxes, he is entitled for the refund, and the person who is claiming LUT, he is not. So there is an unreasonable differentiation has been drawn, and on that ground, it can be tested. You are right on that. Okay. So we'll move on to the next judgment of High Court judgment. This is with respect to the construction service. So here, as we all know, so far as the construction industry is concerned, the legislature has brought a thumb rule that that in case of supply of lakes are where your construction service also are providing and the other services are also providing. In those situations, as a thumb rule, we will take 1/3 as the value of the land. So suppose 100 rupees I am charging the customer, 1/3 I will treat as the value of the land, and balance amount will treat as the value of the service. And that generally, in so far as the Bombay is concerned, is very, very disproportionate, because Bombay the cost of land is very high. Therefore, the parties were asking in that sense that in such a case, whether it's permissible for me to separately mention the value of the land and separately mention the value of the service in the agreement itself, and whether I can, instead of going into that thumb rule formula, they can independently determine the value of the service or not. The builder in that case was saying, no, I will charge what has been prescribed in the formula only. Then the buyer has approached the Gujarat High Court. Another case before the Gujarat High Court was when somebody has taken an AR that when I'm selling the developed plots. So I have some plot. I am developing the amenities, drainage, electricity, roads, other things I'm doing, and thereafter I am selling to various persons. So whether sale of developed plot will amount to sale of service, or whether it will still qualify for deduction in terms of Schedule 3 of the CGST Act was the question. AR obviously has decided against the party only, and the parties approached the High Court. So here, the Gujarat High Court has held that you cannot provide a thumb rule, as we know that every this composition scheme or standard deduction method, there is a general method which has to be prescribed as the normal valuation rule has to be there, and thereafter, if it is not possible in a given case that we cannot determine that situation where the books of accounts are not reliable, our party is not in a position to ascertain, it should be at the option of the assessor, not as an obligation. So they have right from the beginning, Jain and Dunkerley, and they have traced down the legislative history, and they said that this notification described a thumb rule will be not correct. They have read down to say that it will be at the option of the assessee. If the assessee wants to clearly do more so, the revenue has not disputed that whatever party has disputed in the counter affidavit before the Gujarat High Court, the assessee, the parties, the revenue has not disputed. The amount declared by the assessee as the value of the land has not been disputed. In such case, you cannot ask them to go by the formula. They can go by the actual method, Actual method can be stamp duty valuation. Actual method can be whatever generally prevent in that area, or you can yourself can assess and mention that. So long as it is not arbitrary, so long as it does not correspond to unreality, they are bound to accept that. Uh, so therefore, they have held that you can prescribe the different value. Whatever value you can choose, you can mention in the agreement. Insofar as the second contention was concerned, there they have held that the developed plot, so far as developed plot is concerned, this continues to plot of land owner. In that sense, they have said that here we are not concerned with the situation where the construction of the development area, construction everything has been done on the behalf of recipient. So assume for a case that you are the owner of the plot, on your you developed it, thereafter you are selling. According to me, in those situations continues to be plot of land only. You have not done any construction for on behalf of anyone, and therefore it will continue to be excluded from the schedule 3. Second situation where some client has customer has approached you, and thereafter you are developing the plant. But if the common interest in the amenities is not being transferred, you continues to be the owner of the landowner continues to be the owner of the amenities. Even in such cases, there is no rendition of service, because what you are charging for the, because the value may increase. You may charge based on super built up area. You may charge based on whatever consideration methodology you want to adopt, but that doesn't mean that you are selling anything other than plot only. So even in such cases, it will continues to be schedule 3 only. Third situation where you are developing the amenities and the common undivided share in the amenities also being transferred to the recipient. In such situation, the Supreme Court the High Court has relied on the decision of Supreme Court in LNT, paid LNT, where they said that with respect to whatever construction is done prior to the customer has identified, that transaction will not be leviable to sales tax, and only after the stage the customer has been identified. Suppose you have to develop the you are constructing a bungalow. In that sense, you are constructing the amenities, and you have to incur 100 crore. Out of that, you have already incurred 90 crore worth of fee. In those cases, whatever the service rendered thereafter, 10 crore rupees, what has been expanding. To that extent only, service can be rendered. But there again, I have my own doubt whether in such cases also, because you strictly read the definition of, because your schedule 3 exclude sale of land and building subject to schedule entry 5B of the schedule 2. But for that, sale of land is excluded, sale of building is excluded. But for 5B, so 5B, when it says construction of complex, is there on the screen itself. Construction of complex buildings is a part thereof, including a complex or building intended for sale to a buyer. So this will again apply in the case where you are building a complex which is intended for sale to a buyer. So practically, still you can argue that when you are developing the amenities and plot is being sold, it may strictly not fit into the definition of 5B, and still you can argue that you can get out of the 5B. But this present Gujarat High Court has said we are not concerned with such situation. In the present case, we are concerned with situation where the plot is already been developed and thereafter it is being sold. In such situation, levy will not be attracted. So they have turned down the whatever decision rendered by the AAR. They have been reversed by the Honorable Gujarat High Court. So here some issues which I identified is future payment of taxes. You can identify based on stamp duty value in other. You can segregate the value of land, segregate the value of building, or whatever constituent structure you want to construct, and you can pay tax accordingly. If your client has paid excess taxes in the past, so what is to be done? There again, you have two hurdles. One is the time limit under section 54 of the CGST Act. Second will be unjust inducement. Subject to that, you can file different claim. And obviously, whatever the terms and conditions, you can revisit. This principle they have laid down with respect to sale of plot. According to me, the same principle can apply for sale of flats also. So as such, there is no distinction between plot and flat. Same principle can mutatis mundis apply with respect to flats also. Another situation can be if when you are selling land separately and you are selling superstructure or the construction separately, in that sense, whether they can say it's the two supply you are making. One supply, that is sale of land, because when you see the definition of exempt supply under section 17.3, definition of exempt supply says sale of land. Sale of land is also exempt supply. So in that situation, you may have some exposure with respect to reversal of credit, because somebody can say whatever amount you charge land, sale of land separately, separate transaction, and the sale of land is included in the value of exempt supply, specifically included in 17.3. Therefore, reversal is required. Whereas you transfer both as a one single supply, somebody can say that what I am supplying is supply of service only, because 5B, if you are just now seeing the 5B of the schedule 2 specifically says this will be considered as a supply of service. There you can argue that what my activity is has to be considered as one activity of rendition of service, and not two activity of sale of land and sale of service. Whereas so far as the bifurcation is concerned, there may be some exposure from the reversal point of view. Anyone has any questions, sir? Okay, so I will then move on to the next, sir. On this blocking of electronic credit ledger, because nowadays the GST authorities are also very high end at the this thing for whatever rightly or wrongly they are blocking the electronic credit ledger. So this thing is governed by 86 only, and all the decisions, all the three decisions on this which are going to discuss from Gujarat High Court only. So this rule 86 says if the person commissioner has a reason to believe that credit of input tax is ineligible in as much as it is the supplier is non-existent, the recipient is non-existent, or it is taken based on the ineligible document is not available. So only in those circumstances it can be blocked. So the question was, it also says reasons to be recorded in writing and amount equivalent to such credit, and sub-rule 3 says period of 1 year only, which will have a cease to pay after a period of 1 year. So now in this Gujarat High Court new Nalban, the question was, I have purchased something from the recipient, from the supplier of MST scrap, and that supplier, my purchase was duly reflected in my 2A 2B, as the case may be, and the government has cancelled. The supplier is found to be non-existent, and this registration was cancelled by the department. So in such circumstances, it was argued that the department has blocked the credit, but they are not given any written explanation. And the assessee approached to the department as to why you are blocking my credit. They are not given any explanation. Thereafter, the party approached the court. That court has laid down certain principles that in such and such cases, you have to give hearing to the assessee. They have also noted that in some cases it's not feasible to give hearing prior to blocking. In those cases, once the credit has been blocked, after a reasonable period of time, you have to give hearing to the party, not more than 2 weeks. They have to give the thing, and you have to record the reason in writing only, and thereby in this case, the Gujarat High Court has set aside the provisional attachment of the blocking of the credit. So here again, one more principle I want to highlight here, whether the one second. Maybe connected or not connected with this, but one principle which says whether the bona fide recipient, because you have purchased on the strength of invoice, goods has been received, you also made payment to the supplier. Thereafter, I don't have any control, because the way in which initially the GST was introduced, there will be complete seeing law matching of the credit and receiving was investors, but now it is not so. So I cannot know whether the supplier has paid or not. I am at the mercy of the supplier whether he is paid or not. In such situation, whether the bona fide recipient, because nowadays there are n number of shop being issued, internet denying credit only on the ground that this amount is figuring in 3B, but is not figuring in your 2A. In those situations, you can consider there are weight reason, also there are contract decisions. In Delhi High Court in Quest Merchandising has said that you are asking the recipient to do an impossible thing, because I can't know whether that fellow is paid or not, and therefore to that extent it is violative of Article 14 of the Constitution, and it is arbitrary. Whereas our Bombay High Court, in context of set off, they have held so that the credit is merely a concession. Government can put whatever restriction they want to put. Therefore, once the reasonable restriction has been put in by the government that tax, if it is not been actually paid to the government, credit should not be eligible. But one good thing is the Bombay High Court also itself, the state of Maharashtra had made a concession in the sense that first we will proceed against the supplier, and in case we are not in a position to recover the money from the supplier, then only we can come to the recipient. But before doing that, we will not directly go to the recipient of the supply. But now the GST department is not following; they are coming to the recipient only instead of going whether supplier has collected and not paid tax. They are not going to that, and they are coming to the recipient only and denying the credit. So ultimately, whether what will be happening in GST, whether quest merchanting will be followed or Mahalakshmi will be followed, is a matter of time this will decide. But in my personal opinion, when there is no mechanism for the person to decide as to whether that fellow is paid credit or not, you cannot be at the mercy of this thing. What I should have reasonable precaution should have taken. It's not the case as if I am doing transaction with some person who is a fly-by-night operator. I have to ensure some minimum things like is the establishment is there, he is a whether he, because I think we can ascertain whether he's filing returns or not. So that I think we can ascertain. So based on the minimum precautions we have to take, if we have done so, thereafter denying credit without my fault will be very, very erroneous. But ultimately, this matter will travel to Supreme Court only. That's what my personal view only. This is one decision. Another decision on this was interesting question as to whether you can block the credit only to the extent whether credit is available in your electronic credit ledger, or you can block the future credit also. In other words, whether I can say that you have taken eligible credit of 100 rupees. As of now, your balance is 0 only. I will block 100 rupees from the ECL. That's what they have done in the Samay alloys. There, the court held that the marginal notes of the rule itself says the condition of use of amount available. So they have gone by the marginal notes that only when the amount is available, only in those cases you can see, and therefore if it is not available, you cannot block the credit. So here in this case, they have blocked the credit 100 rupees. So as and when I want to utilize, some fresh credit will come. First, it will be utilized against that minus 100. So I will not be in a position to utilize unless until the 100 is becomes 0. Minus 100 becomes 0. In that sense, this will become a permanent recovery because the purpose of 86A is not to make a permanent recovery. These are temporary measures wherein they said that only you will not allow you to utilize, but that doesn't mean I will recover. If you debit in the ECL, this will amount to permanent recovery, and that cannot be the intention of 86A. Based on that, the Gujarat High Court has said if ECL balance is not there, you cannot impose 86A. The third reason is Ambika creation, again Gujarat High Court only. Here simple thing that he has not the whatever blocking is there that was continued more than a year. Court says the rule itself says cannot be more than this thing. But one important observation they made is that if the fresh order is not passed, then they have the discretion. The fresh order is in other words, they simply said that the attachment they cannot continue unless a fresh order is passed. But according to me, even if fresh order also cannot be passed in this case, because the very purpose of 86A is for a temporary measure. Whatever you want to do by after doing this ECL, you go in accordance with law. In other words, you go by 73, 74, issue SOCO notice, or do any other possible mechanism. Merely because after 1 year also, you should again invocation of 86 should not be available, but that's not the point which is being dealt by the Gujarat High Court. So after 1 year, therefore they cannot do so. So these are the three decisions of the Gujarat High Court on blocking of the ECL. Therefore, what I can summarize for you that it cannot blind this thing assertion that it will not depend on my whims and fancies. There's some reasonable basis should be there for ECL. It has to be recorded in writing only. They have to give hearing whether pre or post. But even if not possible prior to blocking of this credit, after decision has been taken, they have to give hearing, and the credit cannot be exceed whatever not available in your ACL, that cannot be blocked. It can be only for 1 year period only. It's not a recovery mechanism. So that's what I want to say with respect to this 86A. Anybody has any questions, sir? Or should we move on to the next?
Yeah, there is no question in chat box, so we can
Okay.
move ahead.
Next judgment also that this bundle technology, Swiggy's case was there that we have argued and succeeded before the Karnataka High Court. Single judge we have succeeded, and thereafter we have filed in Revenue has filed an appeal for Karnataka High Court Division Bench. There again we have succeeded. So this was a classic case of harassment by the department where during the course of investigation they asked me to sit at very late hours, 2 a.m., 3 a.m. Then asked me to make payment. Payment was also made at that point of time, 2 a.m. in the morning. And also they have threatened, like they said, they were during the course of inquiry at the GGI office, they have closed the door. Main gate was closed. So the SSE moved to the court that now I have made payment. I also written to the department that I have not made payment. This payment I have made is made under protest only. Therefore, they are sitting on my payment. Once I made the payment, so therefore DGGI as such is only concerned with recovery. Thereafter, they are not bothered whether show count is to be issued, not issued. They are not bothered. They will effect the recovery, sleep over it. So SSC was contending I have paid some 27 crores or so. Neither show count has been issued, nor it is amount has been refunded to me, and therefore the amount was also paid under the duress, and therefore refunded to me. The court has not gone to the question as to whether there are any duress by the department or not, because court says these are a factual question. In a writ petition, I cannot go into that question, but certainly I can decide a question as to whether the payment was voluntarily or not. The court says even though Form 734 is used, that is to be like DRC 03 is used, which is to be used for voluntary payment. But the factual circumstance in this case, where the SSC was made to sit at 2 a.m., 3 a.m. in the morning, and the payment was made in the in the morning itself, 2 a.m. It gives an indication that amount was not voluntary. Therefore, the court has directed the department to refund the amount within a stipulated period of time. They have relied on Article 265 and 300 that no tax can be collected without the authority of law, and you cannot deprive a person of his property without any authority of the law. So, from this judgment, we have some takeaways that as such, you don't have any obligation. You don't have any obligation to pay during the course of investigation. You can simply say that I understand simply saying at this point of time, situation different when you are facing the investigation, the situation is very difficult. But you have to coach them, your client, you have to train them to say that nothing can be done this, even if you don't pay, nothing can be done at this stage. And more so after the judgment of this Swiggy, the department themselves issued a circular in this 25th May 2022. Very vague circular that says amount cannot be recovered, but there is no bar on the SSC to pay. As such, they are saying we will not recover, but SSC can pay. Very unhappily worded. But one thing you can take it from this is there is no mandation on your part to pay any amount during the course of investigation. If any amount is paid in odd hours, this indicate as an involuntary payment only. And more so, here also in this case, the parties is delayed in filing the protest letter. You should not afraid that if I file later, just now or after 10 days or so, then again they will come back for this thing. So you within a reasonable period of time, you have to lodge your protest that I have not paid this amount under free will. And again, you have to approach the court because we have felt difficulty in this matter as to whether because the court department revenue is arguing after 9 months, 10 months, they are coming to the court and saying that I have paid amount of the protest during the coercion of the department. That also, even though the court has done a favor, but to the extent so far as possible, you should move the court in such circumstances within a reasonable period of time. And these are general preventive action. You have to not only you have to ensure that your return is filed, you have to ensure your supply return is also filed. You should have some proof of receipt because the most difficult and the thing that including for arrest also, if you receive the goods, supply of goods without invoice without supply of goods, or taking of credit without receipt of service, very dangerous. Not only from the recovery point of view, but from arrest point of view. And goods is very easy because goods are coming. You can know. You can have a trail of goods, movement of goods coming to this thing. But service, it is very difficult. You come to my chamber and then I have given some advice. Nobody knows whether advice is actually being rendered or not. More specifically in those circumstances, you have to keep a trail mostly where high value transaction is there. You should keep a secondary evidences for that. That also we have to advise. Any question? I think it's a fairly straightforward, because whatever the difficult one was first 4 decisions where the so many questions were there. These are just for, in that sense, your information. If still you have any question, you can you put in the chat box. Next is fairly straightforward, that the parties has filed an AAR. In that case, the assessee was the owner of some 42 structure rooms, and they have given it to a company X for renting human property. The question was, and the company in turn has given it to for the students to stay as a use as a hostel. The question was whatever amount the company has charged, this person, this Tagar Vasudev has Ambrish has charged from the company, whether the exemption was available. The exemption entry says service by way of renting of residential dwellings for use as residence. Therefore, the objection of the department or finding of the AR was this is not used by residents by X company, used by the hostel, not by the X company, and therefore you are not entitled for the exemption notification. Insofar as the facts are concerned, it's not coming clearly as to whether the purpose of this thing was specified in the agreement between Ambrish and the company or not. Because if the purpose is clearly stipulated that I am giving this, I have this property, I am giving it to you, and you have to necessarily use this as in hostel only. If that is coming very categorically in my agreement with the company, then according to me, exemption should be applicable. That is what the High Court has also held so. But if that is not coming very categorically in the agreement, if the agreement, my agreement with the company merely says that I am giving you for renting whatever you want to you do it, that you do it. If that is the case, then probably department can deny the exemption notification. But in this case, that is not coming properly. But suffice to say that for the hostel residents also, because they also relied on service definition education guide, that what do you mean by the residential dwellings, what do you mean by the residence, whether they have relied on education guide to say the education guide in service text provides that residence and dwelling will mean any accommodation where it is not called a temporary stay. So they're differentiated with respect to club, campsite, hotel, other accommodation. So in that sense, there is little permanence insofar as the hostel is concerned, and therefore it will qualify as residential dwelling and for as residence. Therefore, the Karnataka High Court has reversed the AR finding. Fairly straightforward. This question I already dealt with. Now this transfer of credit also. Why I have included these are interim order. Generally, we do not rely. Generally, we do not focusing on the interim orders. These are interim order of the Odisha High Court only. But the important point here is, here the company JSW was in Bombay. JSW has won the bids for the mining of coals in Odisha. The reverse charge payment, whatever royalty has been paid by Odisha establishment, that is being paid by the Odisha establishment. They have taken credit. Thereafter, they have transferred the credit. Odisha establishment transferred the credit to Mumbai ISD, and Mumbai ISD has distributed to various other units. So the objection was in the garb of support service. The contention of the company was that the Odisha, the establishment rendering a support service to the Bombay establishment, and therefore the entire amount involved some 900 crores or so in this matter. So they have transferred this thing. The court has objected. Court says we will not give any leeway. The revenue can recover this amount. But this is an interim order only. I think this interim order we have filed an SLP in Supreme Court. The matter was about which Harish Salvi is arguing this matter. But only thing you need to keep in mind is wherever this will have a bearing where the company or your client, where the in order to shift the credit from one establishment to another establishment, they merely raised invoice and transfer the credit from X to Y establishment. This will have a bearing, even though it's not a final decision, but this will have a certain repercussion. You have to necessarily review whether any of this thing has been done in your case or not. The interim order. Now, After this thing, we are left only with 1 or 2 AR. You want to continue, sir? I think it's 6:50. So one we can complete. Second we will see thereafter.
Yes, sir, we can continue, no problem.
Okay. So with your permission, sir, I'm going. So because
Yeah.
generally lawyers when they start, they will don't know where to stop.
We have still 10 minutes, so we can continue, sir.
No problem. So here then I want to discuss two. When one is on cross charge, you already must have aware because this AR is generally most of the people will be discussing this AR only. This AR has done that AR has done so. I have very little respect for that. But only thing we should know what is the issue which is being dealt with, whether that can have a representing your case or not. From that limited point of view, you should. So in this Cummins India, the case was the assessee was receiving the common input service. Head office was in Pune, and he was receiving the services at Pune. Thereafter, after receipt in Pune, they were cross-charging the amount to the various distinct establishment. And according to them, their argument was the ISD mechanism is mainly optional mechanism. Only when the assessee wants to follow the ISD mechanism, only in those cases they have to take ISD registration. Otherwise, I can either cross-charge it or ISD. There is no mandatory provision that I have to take both. However, the AR has held that it's not the case. Both are distinct provision. If the common input sales are received at head office cannot take the entire credit because the credit pertains to all the other units. Their triple AR is held that credit has to be distributed only, and that is to be distributed on the ISD route only. It's not optional. You have to take ISD registration. Second question, they say, insofar as the facilitation service is concerned, whether the head office is rendering any facilitation service, there they said yes, the head office is rendering any rendering facilitation service. They are rendering facilitation service, and therefore whatever the service per se, like head office must be doing n number. They are engaging advocate, they are engaging auditors, they are also providing various recruitment services. So many services are rendered by the head office. In those, so far as the facilitation is concerned, head office is rendering service. But while cross-charging the head office, the service of facilitation, they should not take into account whatever common inputs are received from third-party supplier. They should not be taken into account, but because in those cases, the head office is acting in the capacity of a pure agent. Therefore, to that extent, is not required to be included. Another question asked was whether when the employee cost because employees is working for an organization as a whole, and therefore whether employee cost is required to be cross-charged or not. There, the AAR has held that employee is also working on the behest of head office only, and therefore the cost of the employee is also required to be included. I have certain reservation with respect to that because whatever your the distinct person with this establishment, that establishment, maybe from the GST point of view. But one thing is very clear that employee same thing should not apply with respect to employee also. So employee in that sense is not working as an employee of the organization as a whole, and therefore employee cost should not be. But this AAR held that employee cost is also required to be included. And I don't know whether I think there is some misconception in this thing that one of them is enough, either ISD or cross charge is enough. According to me, that is not the correct position in law. Both are separate mechanisms. Both are required to be followed. There are certain contrary views are there. I am aware of that. In the industry itself, there are contrary views. But my independent and my personal opinion is both are separate version only. And the AAR is correctly there that ISD is also required to be done. Cross charge is also required to be done separately for separate set of transactions. Any question on this, sir? Okay. So last question, the last thing also recovery from employee because some AR in Tata Motors also has held so. Therefore, many of the people in the industry are taking a view that this should not be. The facts in this case are the assessee was providing a canteen facility and transportation facility to the employees, and they are recovering certain charges on a concessional basis. The question was whether any supply made by the employer to employee. If so, whether in the course of furtherance of business or not. There the court has held the RRR has held that they are not working in the capacity of, they are not working, they are not doing it in the course or furtherance of business, and therefore this is not required to be, tax is not required to be paid, GST is not required to be paid on service rendered by the employer to employee. But this reasoning, according to me, is plainly erroneous, because even though it's not, then doing this is not your direct business, but certainly these are in connection. When 217A(b) says in connection ancillary to the business, this reasoning is incorrect. But the another reasoning given that the service, if you say the third party, that the caterer is directly render service to employee, therefore there is no rendition of service from caterer to the organization and organization to employee. If that is the case, then this judgment is in that sense is correct. But if you say it is not in relation to ancillary to business, it is plainly erroneous. And one last point I want to mention here, how to decide in all these cases. Thumb rule is, if you want to go at more precise thumb, you want to go by the thumb rule. If the whatever services has been rendered, that is, if that is envisaged in your employment agreement, then it will not be, it is in the course of employer-employee relationship, that will not form part of any service. If separately you are charging gives an indication that is not initially envisaged, therefore you need to pay GST on that. Third category may be cases may pure reimbursement. Suppose your employee is going to a club, taking club membership, and thereafter you are merely reimbursing the amount, 100 rupees whatever is incurred, you are merely reimbursing that amount. That will not be a rendition of service, but these are mainly straight. This is not a in that sense precise. This thing is a ready rough and ready format. The precise this thing you have to see as to whatever service you have rendered. You have to see each and every time whether it is essential for the employee to render service or not. That is a precise test. Like, for example, you are sitting in the office and you are providing AC to the employee. Whether these are required for the performance? Yes. So in that context, you see each and every single transaction, whether it is a part of your rendition of service by the employee to employer. That is the question you need to see. That is the correct test. But if you rough and ready estimate test you want to apply, then 3 tests: whether it is form part of the employment agreement, whether any separate reimbursement is there, or merely in the nature of reimbursement, like in the case of club. And second point, I think they said whether notice by recovery can be liable to GST or not. They have said no, correctly so. That is supported by the Madras High Court in TTNT also. So to that extent, the AR is correct, but only to the extent when it says that it is not in relation to your business, that extent the AR is wrong, may not be followed. So this is what our short submission, sir, short presentation. If you have any question now, we can take up.
Thank you, sir. I request members to either post the questions query on the chat box or raise your hand. So we'll take up the questions.
You can use this PPT. Somebody is mentioning in the chat, sir, whether we can have a PPT of this session. Certainly, sir, we can forward it to you.
Thank you, sir. We will share in the due course.
Definitely. I have completed on 7 only, sir. I have not exceeded my time. When you combination of both CA as well as advocate, then you have to think from both the perspectives.
Yes, sir. And you had covered everything. So we had even not left with any PPTs or anything pending. So it's really good. I think so. There is no as such question in the chat box, and there is no hands is raised. So we can conclude the session here. Before concluding the session, I propose very well deserved vote of thanks to our speaker of the session. Sir, thank you very much for accepting our invitation and delivering this session from your busy schedule.
Sir, all the hard work done by this boy only, Puneet Agrawal. Sir is being quite humble now.
Yeah,
without his
we had an interaction when we had started our Zoom meeting. So thank you for supporting and giving the all support to the sir. It was smooth. 1 minute. I think so. Rajesh, I want to ask some question.
Had it been such a physical meeting, it would have been further much better. But in that sense, because I don't know how much the participants are. I am not able to visualize, but still in that sense, virtual is also good. But only thing, had it been physical, it would be much more fun.
Right. Rajesh bhai, you can ask the question.
No, Girish, there is no question as such. I just wanted, it was an excellent session. And I on behalf of CVO, Dadri CP Strategy Circle, I also congratulate and thanks the learned speaker, CA Advocate Vinay Jain, for delivering an excellent session. Thanks.
Thank you.
Thanks.
Thank you, Rajesh bhai.
Thank you so much, sir. Thank you so much for your time.
So I propose a very well-deserved vote of thanks to CA Advocate Vinay Jain sir and to his assistant. Thank you very much for supporting to make it a very smooth webinar. Sir, for your knowledge, we have both physical also, but not frequent session. So right now the challenge is also
Understand, sir.
yeah, so we are keeping both physical and webinar also, and we are looking forward for the such support from you in the coming
Definitely.
days. Thank you very much, sir.
Thank you all. Thank you.
We are concluding the session and I am ending the meeting here. Thank you very much.
Thank you for being me for 2 hours, sir.
Thank you, sir.
Thank you.